Everybody, it is Wednesday, the 23rd of March, and the S&P 500 gave a little bit back here today. I had posted midday on Twitter a chart that said if we were basically going to lose the week-to-date VWAP, it's likely we would come down to the five-day moving average. And it seems as though we're probably due for a little bit deeper pullback over the next couple of days. I would be looking for this level to hold initially, and then if we get trapped below the five-day moving average, we would have to look at longer term time frames and see if this year to date VWAP is going to hold or not. That's going to be a key level in the 50-day moving average. So really around that 440 level, that was prior resistance, and where we see the year to date VWAP and 50-day moving average, that's going to be a key whether or not this was just another rally in a downtrend that's doomed to fail, or if it's going to turn into something more. Right now, we simply don't know. We're beginning a pullback, it appears, so a lot of caution, I would say, is warranted right now, given the fact that we've just run from 414 to 450 in a very short period of time. The NASDAQ didn't pull back quite as deep. I was thinking that this market would also get down to its five-day moving average. I think it's highly likely that we see something like that occur tomorrow, that we come down to that five-day moving average or the VWAP from this little low right here. And then, of course, from the recent low, we have it down near 343. On the daily time frame, the more important level really is right here with that year-to-date VWAP and that declining 50-day moving average. Now we've spent there's been a couple of times where we've closed above that year-to-date VWAP, three other instances, and so we can't really look at it as being hugely important for the Nasdaq, although it does continue to show a slight downslope to it, and we have a declining 50-day moving average, which tells us we have to be cautious overall. We're back to that 38.2% retracement as well. Looking to the 30-minute time frame, again, we've got this prior band of resistance in here that has the potential to become support. So I wouldn't say give up on the hope that maybe this market turns itself around. But again, hope isn't a strategy, not when we have declining moving averages, increasing rates overall, and a war still raging. The Russell 2000 has been the underperformer here. Excuse me, it continues to be stuck below this prior band of support, which has in fact become resistance in that general area. Over to the 30-minute time frame. Actually, let's look at the 15-minute because you can see that this market was a little bit weaker, relatively speaking. The week-to-date VWAP, we broke below that first thing in the morning and then closed below the five-day moving average. So in this case, I think if we see a rally up, it's likely that maybe we do something like this tomorrow. So that could present a short opportunity. Again, I don't make recommendations for the indexes, but you should be able to infer from the levels that I'm pointing out where the opportunity is. This is a equity swing trading service, not meant for the indexes, but you can certainly use the information provided here for some good swing trades. I do. The semiconductors seem as though they're likely to be headed for this level. What might occur first is a rally up towards that week-to-date VWAP, get trapped below the five-day moving average, and then head down towards that 261, and that on the daily time frame you can see we got rejected here right at the 50-day moving average and the year-to-date VWAP. So a little bit of relative weakness for the semiconductors, and this is the girl that we brought to the dance, and she's not looking so pretty anymore, so that kind of makes it a little bit more concerning. But yeah, I think that it's likely we see further pullback down towards 261. If there's a trade in there to find, to be made, then you should be able to find it. The biotechs, they are still having trouble with the year-to-date VWAP and the declining 50-day moving average. Overall, nothing has changed here. We're still in a primary downtrend on that weekly chart. On the 15-minute time frame, kind of the same story. Maybe we see a rally up that gets stuck under the week-to-date and the five-day moving average, then continue down. And if this doesn't hold, then perhaps we'll see another push down towards the 20-day moving average, which is rising up. So maybe it does something like this in the next day or two. And then if it can find buyers, and not to get too far ahead of ourselves, if it can find buyers at the 20-day moving average, come back up like this, the 50-day moving average flattens out, then perhaps there's a tradable rally. But right now, it's still the burden of proof is on the buyers. The financial stocks, backed off, and they are back to negative for the year, although only slightly, down a little less than 1% year to date. They got a little bit extended here as well. The volume weighted average price, we could take it off of this low or, even this gap, and to see that, if we rally up in the morning, I think this is most likely. So again, there's opportunities to trade these things. It's up to you to decide whether or not you want to take them. The energy names continue to be strong. Oil has been, continuing to show strength. So that transfers to the energy names. They're getting a little bit extended here short term. They've just experienced a rally from 70 to 77. So, 10% rally in the course of a week or so. That's generally a dangerous time to be a buyer. We've been talking about that all week with individual stocks. And, we've been stopped out of some good winners on the long side, but they're not stocks that have been in downtrends. They're stocks in uptrends that we caught prior to the moves, not chasing rallies once they're underway.